Hello, in this video we're going to look at Centene, ticker symbol CNC. What we're looking at here is I have my research engine up, and this basically just provides a whole bunch of data on this stock, which is trading at a really good value right now based on a number of different metrics. So down here we have the PE ratio, which is price divided by earnings. So it's one of a pretty basic metric of whether a stock's trading at a good value or not. And you can see we're down here at some of the lowest levels we've been. Current PE is 14.8 right now. And when it hasn't gotten this low very often, but when it has, like these points here, it has provided a good entry point. So this stock, we can see it typically trades at a higher PE, usually 20 or above. So if we assume that the stock could move back to that type of PE, then that would help boost the price higher. But we also have some other things going for this stock in that it is growing. So here we can see the sales along the top here. So every year, sales just growing. That's what we want to see. EPS, pretty much the same story, a nice upward trend. We did have a couple years, 2021, 2022, where earnings dropped lower, but they've been bouncing back. And if we go to the projections here, so this is what analysts expect. Going out to 2025, earnings are supposed to be $7.60 per share. That's, of course, an estimate. We don't know if they'll be exactly that high, but we kind of have a range here. Some analysts calling for $7.30, other ones calling for $8 per share. So if we multiply that by a more typical PE, let's be conservative still. If we multiply 760 times 20, that gives us a target of about $152, which would be a reasonable estimate if they can get those earnings and we just get back to a little bit more normal PE. Then we could be trading at 150 or higher. And right now the stock is trading at about $73 as of the April 3rd close. So more than 100% upside from here, potential. And technically we can see the price has been kind of channeling up here, and we're kind of near the lows of that channel, so it looks like a pretty good entry point technically. And that doesn't mean it can't drop. It could, of course, drop down into this area or maybe even back down to 60. We don't know. But technically and fundamentally, the stock is looking pretty strong. Forward PE 9.6, that's quite low for a growing company. They've been buying back shares, which is also good, especially since the stock's been a little bit lower. When a company can buy back their own shares at a good price, that helps increase shareholder value over time because profits are then split between fewer shares. You can see the sales have been increasing almost 19% per year over the last 5 years, so really solid sales growth. Earnings per share that have been increasing about 14% per year over the last 5 years. That's an average. And going forward, analysts expect 11.7% per year EPS growth. And comparatively, the median expected growth for S&P 500 stocks is 9.3%. So this company is expected to grow more than the typical S&P 500 stock, which then means it should perform better than the S&P 500. And based on kind of what we've talked about, we should expect that. A B financial rating, that's really strong. A, of course, is the strongest, but B is also considered high investment grade. And yeah, we can just see a lot of really good criteria here. Over the last 10 years, it has outpaced the S&P 500 by 4.2% per year. So basically, if the S&P returned 12%, this returned, or 12.7%, this stock returned 16.9% per year. So it's already been outperforming the S&P, and it sold off along with most stocks in the last half of 2022, and it just hasn't really had that big recovery that a lot of other stocks had. So, it's still providing a decent value here. So just something to keep in mind. And of course, there are no guarantees in the stock market. Earnings might not come in as high as anticipated, or estimates about the future may drop, or the PE could just keep getting lower and the stock could keep dropping. So there's no guarantees. So set your own risk limits. If you decide to go into this, determine how you're going to get out, whether the stock price falls or goes up. But definitely an interesting one to consider as a value stock.